So I think I'm just going to spend some time to really talk about, how do I put it, this idea behind the psychology of many Baba investors today. So, just in my Discord chat, this conversation actually took place just this afternoon, and it's a free Discord, so do feel free to join. The link is in the description below, but there really isn't a lot of monitoring or trying to silence people and take away your freedom of speech. So I think the language employed here might be a little bit coarse and abrasive. Do pardon with it, but yeah, I'm just gonna show you a very quick screen grab just this afternoon. So, Party A talks about, why is Alibaba always so weak in Hong Kong? And then somebody else replied, because it's a beep company in a beep country. So then how come US and Europe are at current all-time highs, but China is lagging behind? Isn't China the fast-growing country? And potentially, we are even talking about a stimulus coming our way to help alleviate the entire property pressures. So I think the biggest issue, or I would say the biggest or the hardest pill to swallow for many Baba investors, is really this idea of comparison. Because we all have friends in our circle of influence that are also invested, and many of them, or actually I would say, or I would argue that most of them don't touch Chinese stocks, particularly so in the West. Maybe in Singapore, there are more people that are dabbling with Chinese equities. But when you see your other friends or families investing in the US market, and all of them are sitting on incredible amount of gains, and some accounts even went up to all-time highs again because the stock market is essentially prompted up by many of or some of these names. I think there was this graph that said that if you were to exclude the top 7 or top 8 top performers today, I think the S&P 500 is flat or something. So if you have companies like Meta, Palantir, Nvidia, Tesla, I think all of them had seen a great run. And then for a particular Baba investor like myself, and then if you just open the chart of Alibaba, at its peak, I think it was 300 plus. This was 3 years ago, by the way, end of 2020, 2.5, 3 years ago. And then at today's price, in the pre-market, it's red again, even though everything seems to be going to the moon in the US market. So then when you're dealt with this set of cards, like the term suggests, comparison is the thief of joy. You compare with other people are earning a great deal of amount of money, while you are stuck in this, I don't know, piece of trash, and there's a lot of opportunity costs. Even though it's a quote unquote value pick, why is value investing not working out? I thought I'm buying something under intrinsic value. Where is my supposed appreciation in capital, etc., etc. So you go down this whole entire rabbit hole, and then you start blaming yourself. Why did you ended up picking Chinese equities, blah blah blah. And I think to add on a second layer of thoughts or a second layer of discussion, Alibaba is like the best trading stock out there for traders. Traders love this kind of sideways, I wouldn't even call it consolidation. It's just, you just draw two simple lines for Baba, and this has been happening since like early 2021. So this whole trend itself has been, Alibaba stuck in this trend for like 2 years. Close to 2 years now. And you see there's two very specific lines here. So one at the $80 range, one at around the $120 range. So you can see that just in this two range bound itself, how many times it bounced. So once, it went from 80 to 120, twice, 3 times, and I don't know whether it will go back to 120 again. So it might potentially see a fourth time. So then, wouldn't it make sense for Baba investors to just throw your long-term position? Let's not talk about what value investing and so on and so forth. Let's just go in when Baba's at 80, sell when Baba's around 100, 110, 120, just slowly take profits along the way. I mean, that's a viable trading strategy. I mean, for many other stocks out there, some of them has also been in this consolidation pattern for God knows how long. And traders will take advantage of them. But I think at the end of the day, you have to answer two questions for your own. Number one, what's your strategy moving forward? Meaning, are you doing value investing, growth investing, trading, whatever? I do believe that there are many strategies out there that will probably potentially work. So you probably need to know yourself and what's the strategy that you're employing. Rather than just trying to come in and out. At first, I'm investing, and then, I see this set up, and then I'm gonna switch up my strategy and then start trading. And then once you start trading, when the stock starts moving again, I'm not gonna trade Tesla, for example. Tesla is going to the moon, so I'm gonna be a long-term investor again. I think that's a very dangerous thought to be in, to constantly be changing strategy because the wind is blowing this direction today. That's the first part. And the second part is, in terms of the idea of trying to profits from the market, right? I do think that patience is an extremely important virtue. And for people that are extremely impatient, based on the conversations that I hear or that I see, it feels like many people aren't really in it for the long haul. And I'll give you an example. So Meta is actually one of the positions that I wished to build the other time when Meta was collapsing and it was a falling knife. But I really didn't have the time. There was not enough runway for me to accumulate because it was a very short period of time. I had some leverage to kind of pay down because of my Alibaba puts and stuff like that. So I didn't really have time to accumulate, and then Meta started collapsing. And I was actually excited, borderline excited to accumulate it like 100 plus, because I think my average was like 180 or something. But I didn't have the capital, so I hope that it kind of stayed in that range. But evidently, Meta had a humongous run again in 2023 and then didn't manage to accumulate. So when it was going up, I didn't have time, I didn't have the capital to accumulate, and then I just let it run. And then from this entire Meta episode, you can see that there are many people that kind of bought at like 100, 150. And then when Meta suddenly appreciated like 200, 220, 230 and it was closing the gap, people started taking profits and they started selling out. And then they said that, whoa, it's a good trade. I profited, I don't know, 40, 20, 30, 40% from this Meta investment they call it. And then today you see Meta is trading at like 270. So is it fairly valued, overvalued, or is there this is it just riding on this AI momentum and maybe it's going to come collapsing down again? I don't know. To be very, very frank, nobody knows what's going to happen. Like in this kind of short-term time frame, nobody knows what's going to happen. But to me, I've been holding Meta. People have been taking profits. I don't really care because Meta, I would want to hold Meta as a long-term position. So that's why I was particularly, how would I put it? I was particularly sad. I was disappointed that it recovered so quickly because I didn't have time to accumulate. And that was the mindset I had. So that's me being sad. Well, on the flip side, other people were extremely happy of this this quick bull run. Oh, they went in for a quick profit and then they start selling out. So I guess at the end of the day, your emotions won't lie to you. I mean, technically, your mindset can be, oh, I don't care whether I'm an investor, I'm a trader. As long as I make money, I'm gonna take money off the table, etc., etc. So I would believe that your emotions is a good trigger point, or at least it's a good signal to tell yourself that, are you really in it for the long haul, or do you really just want it to quickly bounce back and then faster get out of this equities, and I'm not investing in the company, I just want it to faster recover or to mean revert, etc. So I guess for many of these discussions where people are constantly lamenting that, oh, I hope Alibaba goes up quickly and then I can quickly take some profits, or I can faster break even and get out of the stock. Why do you exactly come into the stock? You probably just want to kind of bet on this quick recovery and just faster F off. So from that perspective, I just wanted to share another experience that I had. So Apple, I used to actually own Apple in one of my portfolio, and I wanted to own Apple for a very long time. But the funny thing is, because as investors, we all have our own communities, right? And one of my friends was, I don't know whether he watches my video, but if he is, I do credit this experience to you. So he was basically trading Apple in and out. So he did it like at least 3 or 4 times, and he was earning crazy amount of money because I think he managed to profit quite a bit, because it's just this trend that keeps repeating itself. So this was back in 2020 and 2021. So then you can see that Apple was also range bound between this $100 to $130 range, and also this 120 range. So if you're to be able to catch it, you can see you can basically observe how it bounces. So this is once, and then you come down, you go in a second time and then you sell, and then you go in a third time and then you sell. So this is, if you manage to catch all of it, this is three rounds of profits that you earn from the in-between. And then when after Apple broke out of this trend, then the second trend forms. So from 120, you can basically hold it until 130, 140. You let it go. It will come back down again. It go up and then you let it go. So that's basically how the mechanisms of trying to trade into this range. And to just show you, I was trading on a very dinosaur platform, and I started moving over to the zero brokerage account. But just to kind of show you my Apple buys, right, last time, I think I was intending to buy Apple and hold it for the long term. Long term, they say. Then I was kind of convinced that, I should come in and play the bounce as well. So you can see I actually bought Apple in October of 2020. The cost was around 114. And then I sold Apple. Let me show it to you. I sold Apple because I saw my friend making quite an incredible amount of profits, right? And then, he told me around 130-ish, you can kind of sell and then try to come in to hunt for the bottom again at 1011. And then I sold it at 130. I think this was April. And you can see that the fees involved is like 10 USD because it was a dinosaur platform. I'm not going to name and shame the platform, but yeah, now a lot of the brokerage firms out there do offer zero commission. I do have affiliate links. Interested, you can head in the link below. But anyhow, I also wanted to play this entire bounce and think that I'm very smart and start trading it. And then, yeah, you guys know the rest is history. Apple went up to 180 something and then it came back down and then it went up to 180 something again. So, to be very, very frank, in hindsight, when you look back at stock charts, wow, it seems like it's extremely easy. It's an easy play. It's easy to earn money from the stock market. You just play this kind of range bounce. But in actual fact, when it's happening, who would have known that this was the last time Apple came down to 120 and then it doesn't see 120 ever again? Or maybe it did during the drawdown, but that was after, I don't know, from May of 2021 to the starting of 2023. So you would have needed to wait for like 18 months for Apple to reach 120 again. So this is just an interesting experience that I wanted to share. For people that are trading, please carry on with your trading. I'm not saying that don't trade. At least you know that your strategy going in is to play the range bound. However, for investors or people that really want to hold it out for the long term and do what value investing, whatever bullshit investing you have out there, just insert the name here. Then follow the strategy and don't keep getting enticed by the other side. Oh, they're earning a lot of money now. Why am I missing out and stuff like that? So yeah, I think this was my first entry into Baba. This was back in late 2020, around 220. So yeah, that was basically my first Alibaba position, 220, and I've been averaging down for God knows how long. And just to show you a quick portfolio breakdown, yes, I'm still down on my Baba position. I'm down 25%. My average price now is around 116. I haven't been buying. I mean, I do still have outstanding put positions on Baba. I sold puts on them, lead puts. And this loss actually do amount to a 5-figure loss. So think about it. End of 2020, I entered, and now it's like the mid of 2023. So that's how long? 2021, 2022. That's 2.5 years. And I'm still down 5 figures on Baba. And I'm still down 25% of the position, despite accumulating for so long now. And you just look at all the positions that I have. I did blank out 3 positions because it's a new position. So in due time, I might make a video about it if you guys are interested. But just look at the distribution. At least in the US market, if you do hold many of these US tech companies or buy them when they're in the lows, it's all in the green. So it doesn't matter what company you pick. You just buy a US company, a big mega cap or big tech, or companies that are unfairly beaten down last year. All of them are green. You don't need to be a genius to do it. And you can see it's all, regardless of what stock you pick, all the nonsense stock are probably all in the green as well. And a lot of the speculative stocks are also in the green. It's only the Chinese stocks like your Baba or Tencent. For me, I was really lucky because I didn't really buy Tencent very early on. I kind of caught it at the bottom. That's why I'm green on Tencent. But for those of you who have been long-term Chinese equities investors, then yeah, you would probably be in the red. You can't run away from this. So that's why there's this exasperation. But just like to kind of just remind you guys or just tell you guys that your emotions don't lie to you, and how you are feeling, whether you're feeling excited, you're feeling exasperated, you're feeling sad, you're disappointed, blah, 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 it tells you a lot. And I think you can just kind of take the time to basically reflect on whether is it aligned, whether what you think your strategy was and how you are feeling right now, is there an alignment or is there a disparity? And then is there some sort of dissonance? Or you think that you're an investor, but why are you feeling this way? You're not happy that the stock is cheap and stuff like that. So that's just some general thoughts on that. But yeah, if you guys are interested, feel free to leave in the comment section down below if you want me to review a portfolio soon. If not, remember to just always tap that cute little like button on your way out. And I'll see you in the next video. But more importantly, I'll finally see you on the moon. Goodbye.